Good morning. It is Thursday, April 18th. It is Netflix earnings day. And if you don't know, I'm big on Netflix. But let's start out with the Qs. Here's the thing. The unemployment report is probably out now. It's going to come up on my TV here in any minute. And I'm going to take a look at it. Not sure where the futures are. But so far this week, we've had futures that were positive and got knocked down during the day. That's essentially where we're at right now. Futures are positive. They've gotten knocked down. I want to start out. I'll go over the Qs. I'll go over everything. There's a couple of things I want to start out with. Let's see, initial jobless claims. Also, April Philly Fed manufacturing. Looks like futures are heading in the downward direction on this one. But I'll look at my TV screen in a little bit. My dad says that Netflix will go down tomorrow after earnings. This is a great Wall Street Bets post. Because it exemplifies Wall Street Bet. I'll put it in the newsletter. But it's interesting because it's about how this guy's dad said he's got insider information about Netflix earnings and it's going to be bad. But his dad is always wrong. So the guy's saying, hey, it's good. The comments I love was, your dad told me the same thing last night at the bathhouse, and the mom comments. This is exactly what Wall Street Bets is like. And it's so fun to read. It really is. As an immature 53-year-old, this is fantastic. This is unbelievable just to sit there and read this while on the couch. I love it. So go to the newsletter. You'll read that one. I also wanted to point this out. Seeking Alpha has a new tool. It's called comparisons. And essentially, you can pull up any sector that you want. Oh, say you want to look at cybersecurity stocks. Look at cybersecurity stocks. You click on it, Zscaler, CrowdStrike, Okta, Sentinel, Cloudflare, CyberArk. You can put PanW in here if you'd like, but they're just doing kind of ones that they recommend in the quant, a little bit higher. You can see CrowdStrike, strong buy. CrowdStrike, strong buy. CyberArk, strong buy. Say you want to look at some other sector. Let's go back to the comparisons and we can go to 5G stocks. Compare the top 5G stocks. Verizon, AT&T, T-Mobile, Qualcomm, Broadcom, and Telefono Ericsson. I don't even know what that is, but I own Qualcomm. I own AVGO. Qualcomm is in the core portfolio. I do not own that one. Say you want to look at artificial intelligence stocks. NVIDIA, Symbotic, Upstart, C3, Internal Business, Microsoft. You can edit these comparisons together, but what it does, this comparison tool, it just brings up good stocks that you can kind of look at and compare. Look at IBM. IBM, solid Dow stock, valuation C+, growth D+, profitability A+, momentum A, EPS revisions A. You can see in the quant, dividend safe. It's a safe dividend stock. So if you want something that's in the AI world, because IBM is in the AI world. So I found this interesting, the comparison tool. I'll have a link to it. If you're not signed up for Seeking, I don't know if it's part of Seeking Alpha Premium or not, but if you're not signed up for Seeking Alpha Premium, you can go over here to Linktree, and it's the second one, and you get 20% off. I think it's $189 for the year. How can Premium help you drive decisions? It unlocks all the stock ratings, all of the feedback. You get a free 7-day trial. It goes from $239 to $189, by the way, when you use my link. So it's a really good value there. I really like this tool. I thought it was interesting. Helps me find some stuff. I was using it just earlier. I did just kind of cursory overlook at it, so I haven't gone into depth. But I like it that they put it out there and they let you look at different sectors, FANG stocks, gold, ETF, hydrogen stocks, hotel stocks, mega cap stocks, oil stocks, social media stocks, solar stocks, technology stocks. They basically have put things out there so that you can look at these different sectors. I liked it. It was really good. So let's talk about NASDAQ and Dow futures tick higher. Let's see. They just cursory went over the stuff. Futures are a little bit higher. Nothing crazy. But let's be honest. Yesterday was bad. I mean, here's the S&P 500 heat map. My eyes immediately go over to semiconductors, and this was KLAC. KLAC is the symbol. They announced earnings, and they are a semiconductor. You can see it down here. Semiconductor manufacturing equipment provider. They announced that there was a slowdown in a purchase of semiconductor equipment, which makes everybody think that chips are going down, which to me, opportunity. I think it's greed time. The problem yesterday, and it wasn't anything other than yesterday was bad with those earnings. I think semiconductors took it down. I think it just spread through the market. But the issue was bond rates fell. So not only did stocks fall, bond rates fell. And without buyers showing up, the market's not going to go up. So it's not all doom and gloom. We'll go over some earnings, but this was 100% KLAC earnings and semiconductors taking the rest of the market down. Now, we've talked about the Qs. We've talked about how that 429 was support. We've broken down from that support. We're below it. Yesterday was clearly, for the majority of the day, we were below that 429. We were at 425 was where we closed. We're at 427. We're up 0.3% on the NASDAQ right now. And it is Netflix earnings day. I continue to say, I think earnings will be good. I think AI is still in this market. I listened to Dan Ives last night, who said, yes, we are in an AI change of pace. This is a golden buying opportunity. I continue to say that. And yes, maybe I'm proven wrong. But in the theory of just, hey, this is a good move, I think we're fine. But, and I want to point this out, when you go to a weekly chart and you look at this, I said this before, back here in July, where it was July to October, we saw a 3-month move of 11%, 3-month move of 11%. It felt like doom and gloom. So far in 1 month, we're down 5%. So do we have 2 more months? You go into April, May, June, you go into the June meeting maybe, and we're down. But then July, maybe you get the hopes of a rate cut in July and we start moving up. But in my mind, the 5% down provides you a buying opportunity, and we'll go over it. Earnings are good. Earnings have been really, really good. We look at yesterday. Here's NASDAQ sheds more than 1% post the day, and I just scrolled down to this summary. On Wednesday, took the spotlight with a few major names. ASML reported 61% slide in bookings. Yeah, it was ASML. That wasn't KLAC. I'm sorry. But chip heavyweights such as Micron, NVIDIA, and Broadcom all went down. This was what shocked me. UAL provided a lift to the S&P 500, surging more than 16%. Provided better than feared results for a quarter that saw a significant headwind in the form of grounding of Boeing MAX fleets. Other carriers such as American Airlines and Norwegian stock received a lift as well. This shocked me. I don't think, I think, again, any reaction in the market is an overreaction. This was really, really big move in an airline, 16%. Right now in the quant, it's a buy. This shocked me. This just shocked me. It wasn't that good. I mean, it's an airline. I continue to say you trade these airlines. You don't buy these airlines. You trade them. So on a trading perspective, United Airlines, we can go and take a look at the chart. We'll go back to QQQ real quick after this. But United Airlines, the chart, look at that. I mean, we've got a gap here between 43 and 41. Are we going to go back to fill it? You can see from the algorithm has you in at 47.84. The algorithm makes you 23% over buy and hold, makes you 4.5%. So it's not a great algorithm on this one. I will say it's because you've had a couple of big wins on this. But if we look at this weekly chart on United Airlines, and we just expand this out. Let's expand this out so that we can see a little bit. It really hasn't done much. I mean, your 200-day still moving negative. Your 50-day had this huge golden cross while it was still going down. But it never reverted back under the 200-day. I don't think that this is a huge buying opportunity. I just think this is just floundering up and down. And yes, it's 16%. Yes, they had a great quarter. just don't get sucked into something like this. Because again, I think any reaction in the market is an overreaction. When we look at the Qs, and I brought up, hey, we broke down below that 429. Where's the next support level? In the 4 hour, the next support level is that 200 at 421. That's the next support level. Look at how low that MACD is. Look at how low the RSI is. Now, when we go to the weekly, because again, we want to see where's the next support level. The next support level is probably the 50-day at 390. I don't think we get down there. But could we? Absolutely we could. Because if we look at this, I'm going to do a new line. If we look at this and we go from the high there down to the 50-day, that's a 13% move. Now I'm going to take out the time range in here so that you can see this. That's a 13% move down to the 50-day. That mimics this 11% move. So when do we get down there? I don't know. Are we getting down there? I don't know. This MACD is extremely high. We need it to cool down a little bit. And this is on the Qs. If you look at the daily, which is where most tacticians will look, we've crossed that 50-day. Ironically, that 200-day is right at 397. I would say that we're looking at probably about 410, 415 before it becomes, holy crap, I'm loading up the Brinks truck. I'm selling my Apple. I'm buying everything. And I don't mean I'm selling my Apple stuff. I'm just allocating my portfolio. I'm selling my Apple and I'm moving stuff into other stuff that's going to run. Apple, in my mind, I think Apple is still a risk even at 167. Long term, I think you're fine. Short term, I think you still have risk. There are people that's saying in June we're going to see some type of major AI thing. I do think, and I continue to say this, if you have an iPhone, start using Siri. It has become significantly better over the last 6 months. By far better. They are releasing different things that happen. I've gone over in my previous stuff how I get pictures. This was a few months back. I started getting pictures while I was running or walking on text. And Siri would actually, in my AirPods, describe the picture that was sent. Visually describing it. Yes, Google has had that forever. Yes, it's been, you can use Google Photos that has some features that Apple Photos doesn't. But if Apple figures out and starts to say that they have a large language model that's local to the phone and the ability to do that, that is a huge move forward. And if they can start monetizing that, boom, this one's back to 170, at least 180. And again, remember, the price targets are still 250. So Qs, I think you have some downside potential. So far, we don't see an upside. And you guys know I always say it. I like to play in that middle ground. I am trying to time this, but I'm doing this for long term. Yes, I'm down on a few of my buys of recent, but I'm not worried about it. It's long term. I'm not looking for a day trade. Right now, I'm not day trading this market because we're on the downside. Am I protecting myself? No. I'm just not that type of trader. But if you want protection, you can buy protection using the inverse ETFs. You can do it. No problem. Taiwan Semi reported. Rises after Q1 beat, upbeat Q2 outlook on AI demand. They've gone down. Pre-market, it's down 2.5%. We can go look at it. It's in the core portfolio. This is a stock that I think has opportunity. It's down 2.5%. I don't exactly know why it's down 2.5%, other than we talked about this 141 being a resistance point. Right now it's at 135. That 135 is right at the VWAP. If we pull this back to right back to the last earnings in January, your VWAP is at 131. I would expect that to be the next support level down from 135. Now, do you want to trade this one? I don't think it's got any room for trading. I said this, the algorithm got you out. If you wanted to bet on this one, I didn't think it was a bad bet at 140 because I do think we passed that 140 again. But their earnings, they're down. I think this is just a sell the news kind of event. If we look at the weekly, it's extended. It's extended. Look at how high that MACD is. And many charts look like this. But, my point is that things are good. Look at Blackstone. Blackstone beat. Here, Blackstone and pre-market, they topped Q1 census. As expenses surged, their expenses surged. They're down 1.77. Yesterday, they were up 1%. It just gave back yesterday. But when you look at the chart and we look at the 4-hour, it's going in there weak. And so, again, the MACD is down. But when you look at the weekly, this one has run. It needs a little breather. So take a look at those short-term and long-term. And I do think there's opportunities here, but I think the opportunity is long-term. I don't think opportunity is short-term. Now, D.R. Horton reported. D.R. Horton guides for a higher fiscal year 2024 after a strong Q2 beat. We go over and we look at DHI over here. Now, you guys know I bought the ITB. I bought BLDR. This is a new home builder. But look at how they go into the earnings week. Now, this is up. It's because it's down and they reported a good quarter. If we go to the weekly, this one has started to take a little more of a break than the others. Still isn't a big break. I'd still be concerned on this one. You're at all-time highs. The MACD is super high. But again, the beat justifies the short-term gain. Is it a long-term one? I don't know. I mean, again, home builders, we can't build enough homes in this country. So, again, good news, Micron, to get 6.1% grant from the U.S. for local chip making. This is part of the CHIPS Act. 1.44% in pre-market. If we go to MU and we look at the chart, this one has been a monster. This is just part of the chips that have run up. And you look at this one, since their earnings back here, they gapped up. They've continued to go. Algorithm got you out with a 35% gain. Now, short term here on the 4-hour, it looks like it's an opportunity. You go to the weekly, and I said this before, when you cross this, you get a nice move upward. But it looks like it's extended. Do you want to buy it? Long term, I don't think it's it's bad. When you're looking at a weekly chart and it's extended, it means that you might buy in the short term. And if we don't get a market turnaround, you might have to wait longer to actually get that, and you might be better off dollar cost averaging. That's all that means. So Micron, read that article. Fed. I think her name is Gloria Mester. I forget her first name. I just know her as Mester. She's a voting member of the Fed. She calls for more data before taking action on rates. That means June is probably off the table. We've talked about how don't fight the Fed. It is that kind of market at this point. Bears have taken over. Don't fight the Fed. She says we need more work on inflation. It came in a little hotter. So you want to listen to these types of news stories, and you want to take a look at these things, but don't let them cloud the fact that the economy is good. Yes, things are going to take place in a short term, but I do think that you want to make sure that you have your portfolio set up so that when we do rebound, you're not caught off guard where you're all in cash and you have to buy stuff back. You want to set yourself up now for the long term. This is, again, a buying opportunity. When Warren Buffett talks about getting greedy when other people are fearful, we can just Google. Let's just Google fear and greed index. And we can Google it, and we can go and look. It's run by CNN, so this is the essentially where you go, and you can see this chart. I mean, you can just Google this, fear and greed index. It's a big one. We're in fear. Right now, we're in fear. That's big. I mean, again, market momentum, neutral. Stock price strength, fear. Stock price breadth, fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. Junk bond demand, greed. They're getting greedy. And so when you want greed, you want to look at that fear and greed index. Let's talk about some of the good news. Microsoft Cloud, AI, Citi upgraded them, 0.14. I've said this before. I think Microsoft is setting up for a move higher after earnings. I believe earnings this period will come in really, really good. I think AI stocks will continue to make that move. We've talked about this right here at about 405, how this is a support line right here. And this was weeks ago. Algorithm got you in at 413, has you out right now. There's some weakness. Do you want to be weak? This is still my number 2 or number 3. I'm not sure. I have not trimmed this one. I have added to this one. over the past probably 3 weeks. I'm down on some of the buys, but overall, I'm way up on this name. I mean, this is a name that you just get into. This is where Citi says, hey, it's got an opportunity. They lowered its price target to 475 from 480. But that's just on foreign exchange headwinds. That's it. Microsoft, again, I think it's going to be super strong. You look at the 4-hour, it's weak heading into earnings. You look at that divergence that we're seeing, where we were seeing some support. We're not seeing that support now. You look at this one from a weekly, it's extended. It's extended going into earnings. If the earnings aren't superb, you're not going to continue this. I would say anything under 400, it's an absolute buy for the long term. At 411, if you're creating your portfolio, say you have $1,000 that you want to put into Microsoft, go out and buy $100 today at 411. As you get earnings you may have to buy it at 430 next week, but at least you've got that 411. If you get better, if the earnings aren't good enough and you go out to 387, at least you have that 411 and you have $900 left in your pocket. There's a way to play these things smartly. It's not about putting your entire fortune into, yes, I did, you guys can say, oh my God, you did that last year in Amazon. Amazon was so clear to me that it was an opportunity to buy that I put $40,000, $20,000, $30,000 into it. I forget. But remember, I had a core portfolio that was down at around a $50 price purchase per share. And so buying at that 120 wasn't bad. It was just, hey, even if it goes down to 80, I've still got gains and I've got time in order to make that money up. Now that 120 buy last year, because Amazon's up at 180, looks fantastic. But this is how you play the long game. This isn't about trading. This is how you play the long game. And yes, there's an ability there to trade within a retirement account, but this is more about playing the long game in your brokerage and your retirement account. Because somebody said to me yesterday, why are you holding on to Apple? It was at 190. Why did you only sell like 3 or 4 shares at 190, but you're holding on to tens of thousands of shares at 160? I believe it's at least a $250 stock at some point in time. Do I need the cash? No. Am I protecting my cash? Probably not the best time, best way of doing it. But we're all different. I don't know if I sell Apple, then I'm actually going to buy more Apple, because the consensus in my brain is, hey, if I get rid of that, then I'm lowering my exposure, and that's probably a good thing. So I'm not going to buy it. And then when it pops to 190, I'm going to be like, ugh, God, I'm going to feel horrible about it. So Microsoft is one of those core names that you want in your portfolio. Now let's look, because tonight it's one of my names. It's not a top name in my portfolio, but it's a big enough name. Netflix. Eyes on subscribers, growth, ad tier, and performance. This is where I think we start to see a move in the market. They're going to look at subscribers. Coming to subscribers growth, UBS raised its estimates to 7.8 million ads versus the prior 4.3 million, while Morgan Stanley expects a healthy contribution in Q1 net addition from paid sharing implementation. This is the biggest thing that they've got going, is it's going to be all about the subscribers. I'm slightly concerned that consensus where you move it from 4.3 million up to 7.8 million, you're expecting almost double. I mean, that's a big move. And so I'm slightly concerned in that. Am I selling my shares? No. Am I buying them beforehand? No, because I already have shares. Should you buy going into this? I think it's similar to the Microsoft situation. If you want to have Netflix in your portfolio and you don't yet, buy it 611. That's where it's trading right now. Buy it at 611. I would say buy it before the earnings. I would probably buy, if you're putting $1,000 in, buy $100 of it. As you see it pop up or down after the earnings, buy another 100 shares in the after hours. If you can't do after hours buying, or you can't do anything of that sort, but I do think that you want this name in your portfolio. And we've gone over this before. Why? Because when you look at the weekly, they have not reached their all-time high. You still have room to the all-time high, 700. let's go and look at some of these Wall Street analysts who are saying, hey, there's, over the last 30 days, Wall Street, I think it's 47 analysts. 47 analysts. Their average price target is 627. So you've got upside in this one, according to the price targets. Now, price target, it's typically, during the bad times, the price target was way overvalued. During these good times, it's hugged that price target. Now, you're kind of close to it. 618. It's trading 611 right now. The price target is 622. It's only a 2% upside. I'm sorry, it's trading 613, and there we go. 627 is so you've got, just a 2% upside. But I do think you get back to that $700. Are you going to get back to it today? No. When we look at this valuation, it's a hold. And the reason it's a hold is because look at this high PE, look at this stuff. The forward gap peg, that's what you want to look at according to Steve. Now it's at 1.19. It's 10% below what the street is trading. The sector median. So I do think that there's an opportunity here. It's number 7 out of 36. If we look at the top ones, there's other ones. There's IQ, there's IMAX, there's MSGE, Madison Square Garden, which actually owns the Sphere. I believe 10 Cent Music Group. There are other opportunities. I do think that Netflix is the top one. So I like this one, and I like it a lot. I own it. Am I adding more to it? No. The algorithm makes you 54% versus buying and holding makes you 76.9%. If we look at the algorithm right now, the algorithm has you out. It has you out, doesn't have confirmation. The RSI is down at 46, not completely oversold. The MACD is just at the oscillator. There's a lot of conflicting stuff. But what you can see is look at the volume that you get after earnings. Now, that's really good earnings. Let's go back and let's see if we can see the volume after a bad earnings. This one, good earnings. It kind of went up there. Well, I'm sorry. Yeah, it went up. That was good earnings. Volume popped. Now, when we look at something like the previous earnings, it was okay earnings. Volume still popped. Are you upset that you bought this at 468 here? Because you used that October, from July to October, you lost what? Let's see. If you bought in July and you went down to October, 27%. Are you upset that you lost 20%, 7% on $100 because you bought it and you never really saw confirmation to buy more? No. Are you upset that you didn't buy it, at $394? After this earnings because you wanted to add in another $100? Yeah. I mean, if you add in $100 here, $100 here, and $100 here, you've so far got 30% of your total portfolio that you want in there, and you're up. You're up on all three buys. So it's all about making sure that your strategy and your portfolio work for you and you're able to sleep at night. Different people have different risk tolerance. Josh from Spotify. Hi, Gary. Thoughts on BLDE? I'm holding with decent profits with hopes that it takes off further in the coming years. This is one that I think this is like a flying taxi one, Blade Air Mobility. Chart-wise, I mean, it looks like it's extended a little bit right now from that 295 up to 364. MACD's a little bit high, not huge. You're seeing a cross down. Algorithm's going to get you out. Algorithm loses you 7.8%. But if you bought and held this one for 2 years, you've lost 61%. So this is where I would, Josh, tell you, look at that 200-day. It's negative. Look at the 50-day. It's starting to go up. Higher for longer will kill this company because BLDE, if you don't have Seeking Alpha, we'll just go over to Finviz. It's losing $56 million. Its market cap of $273 million. It's losing 25% of its market cap every year. So, okay, they only have $225 million of sales, but they're losing $56 million on that. Now, their short float, only 6.29%. Performance year to date, they're up 2.83%. Performance over 1 year, they're up 29%. Over 6 months, they're up 63%. So they're doing really well. They're 20% off of their all-time high, which is 454, which is 52-week. Average target price, $7.30. Let's take that with a grain of salt. The reason is because a lot of these $15 and $16 price points were put in 2021. There's only 2 in July. They say it's worth $13, and it's both Land and Thalman. So take it with a grain of salt. I don't think that one's justifiable. If you look at these guys, they're selling. And by the way, for this company, that's probably a fairly large sell. Not huge. I mean, this guy wants, the CEO wants to live his life. $83,000 he made. I mean, take a look at that. It's not horrible. But you go over here. Let's take a little look on Seeking Alpha, because Seeking Alpha will usually give you a better look at this company through either the quant, some of the analysis that Seeking Alpha folks do. You can take a look at it here. And this is where I would guide anybody. Look at this. I mean, it's a strong buy in the quant. It's ranked number 3 out of 26. You can see revisions A+. Profitability is D. And the reason its profitability is D is because their gross profit margin is only 18%. The sector is 30%. EBITDA margin, 20%. Sector median, 10%. EBITDA margin, minus 17%. Again, look, most of the places are making money, and they're making significantly more money. Blade is losing money. That's where I'm like, okay, I don't think I need this one. I mean, forward gap, they're not projected to make money. So that's where you've got an issue. Now, some of these folks, Seeking Alpha analysts say buy. Wall Street says a strong buy. Quant says a strong buy. Archer, Joby, you can see people also follow these. Seasonality, if you want to take a look at that. Win rate, 80%. Win rate in March. But, that's just because of that 22%. I'm sorry, February. Then you look at April. Let's look at May. May, 23% in 2023. 2024, we don't have yet. 2022, it's minus 20%. That's all over the place. The bulls say Blade Air doesn't trade based on current results, much less than massive opportunity to be unlocked in EVAs in the near future. Blade is undervalued compared to growth prospects. Again, whether you think this is, it provides its services through charter by seat. Okay, jets, turbines, amphibious seaplanes, blah, blah, blah. I mean, obviously the revenue is continuing to go up. You can see quarterly. It's kind of taking a little dip here. These are estimates. So it's a little bit down. Honestly, for me, Josh, I'd say it's a trade, not a hold. It's not making money. And that's the difference between I'm 53. Josh, you're probably on the younger side. If you're trading Blade, you may be on the younger side. I hope you're on the younger side. This may be a shot to get into one of those life-changing things. It's like I say about Bitcoin and crypto. I'm not a huge crypto fan, but I'm older. And I do think that you've got an opportunity to get life-changing money. It shouldn't be your main focus in your portfolio. I don't think it's a bad thing. I personally would trade it. I would trade it on something like the algorithm, which actually provides you some type of ability to get in and out. In fact, even the 65-minute doesn't work. But you can use Trendspider to find a strategy that does. Go into the Discord group of Trendspider and say, hey, does anybody have a strategy for Blade? And Jason may even write you one that actually works, based on some of this stuff, the Variance Explorer and stuff like that. Again, you got to find a strategy that works. I don't think for this one, hope and pray is a strategy. It is not making money. If you're sitting on good profits, I would take the profits. Honest to God, just buy back in. Take the profits and buy back in. Scans. These are ones that show bullishness in the 4-hour algorithm. Pepsi. I've said it before. I think it's a $170 stock. Anything under $170, I think you can buy it. It's definitely put in that range. You've got a cross up here on the MACD. I think you may be going to 174, 175. I don't know that you necessarily go up higher on that one. You can see we've broken down. It's using that 200-day as support. So if you want to buy it here at 169, 170, I think the support is 162. I don't think you're going down below there. You can see this trend. Look at that trend on the weekly. It's clear. You might very well have upside, but GLP-1 comes into play with this one. If GLP-1 is going to be successful, you may not want to do that. Goldman Sachs, we talked about Goldman Sachs and some of the financials. This one pulled back buy at 403. I say if you get this under 400, I think you're perfectly fine. The algorithm makes you 51% on this one. Buying and holding makes you 20%. So you do want to trade this one. You want to make sure that you're finding entries. I said it before. This one right here is anything within this range. I think you can buy it. I think you can hold it for the next move up. We talked about this one. When you look at a weekly on this one is in a solid upward trend. It's got a little bit of pullback now. But the 200-day is solidly moving up. The 50-day solidly moving up. Everything's moving up. The Bollinger Bands have cinched up. Where do you think it's going to go? I think it's going to go higher based on their earnings. We had a leveraged ETF that crossed up. And this is it's not even levered. It's 1 times bear on the Apple. And if you look at this one, 2303, is Apple going to go into a bear territory again? If you think that that's the case, then you can use AAPD for the inverse. I could be using this to protect my portfolio. It's just something that you want to look at. A couple that have moved on the watch list on the long term and have had pullbacks, Deckers, DECK. This is, the weakness came because, Hoka shoes, which they own. Look at how low that MACD is. Look at the MACD crossing up. Look at the RSI at 35. Does this one have continued support here? You look at the weekly. This one's still moving in that direction higher. It's had a pullback. Now, it's super, super high on that MACD, super high on the RSI. If you want to get in here, I think it's still got room to run. If we go and we look at Deckers in the Seeking Alpha Quant, it's a hold. It's based on valuation. Everything is an A. But then you go to the valuation, and their non-performance PEG, non-GAAP, is forward 1.59. That is 9% over the sector median. What's a better one in here that might be a buy? Again, it's ranked 2 out of 9. Skechers might be a better buy. I don't use Hoka shoes because I think they gave me plantar fasciitis one time, but I do buy Skechers, and I use Skechers because I go out back in the back. I buy waterproof Skechers that just feel better. I'm not wearing Crocs. There is no freaking way I'm ever wearing Crocs, but this one's a buy in the quant. Another one that just got a cross up is Abercrombie and Finch. Abercrombie and Finch is one of the alpha picks, and it's an alpha pick for a very long time. They have been in this one for a very long time. 113.45. This is Abercrombie and Finch. If you like to over cologne yourself, if you like to wear too tight of shirts, if you like jeans with the little fluff on them, yeah, Abercrombie and Finch. If you're wearing big belt buckles and cowboy hats, Abercrombie and Finch ain't your thing. But look at how low that MACD is on the short-term 4-hour. 113 is the buy. When you look at the weekly, same thing. It's turned over a little bit, but the MACD is still high. So you've got to understand what you're buying into. Another alpha pick that has a cross-up. We talked about it yesterday. Cardinal Health, CAH. This one is one that's pulled back. It's down below its 200-day. It's an opportunity to get it below its 200-day. The MACD, again, on the 4-hour. Their earnings are coming up May 1st. So they're coming up with earnings soon. Now, is this one going to continue the upward trend? Look at this one shoot up. It's an alpha pick. Now, the MACD is super high. Do they somehow tell you that, in their forward guidance, we can go over here to Seeking Alpha and we can look at CAH. And what we'll look at is we'll look at their earnings. And you go over here, it's decreased. Again, this is, it's an increase. So their forward guidance is a decrease out here in the full quarter 2024, fourth quarter. Then the third quarter here, which is getting reported, the estimate is a little bit higher, 12.56 year over year. It's 15.45 year over year. And then you get to the 7% and the 5%. If these come in at hey, we're going to meet this or we're going to beat this, this one continues to go up. So I would take a look at this one. This one, Cardinal Health. I own this in my dad's stuff. We have XBEV. We have O'Reilly. We have Mondelez. Charter. Charter is a company that I used to work with. I am currently in a lawsuit with them. I'm part of an Earthlink lawsuit. I'm not supposed to talk about it, but F them. Let them sue me. This one has a cross-up, and it's part of the NASDAQ 100, 258. Would I buy this? No. But I wanted to point out, look at all the weakness in this since the last earnings. Now, the 4-hour gets you in at 258. The 4-hour actually protects you. It loses you 14% over 2 years, but you lose 53% of your money if you bought and held this one for 2 years. Now, if we go and we look at the weekly, this one is continued down. This is just a weak stock. But if we go over here, I know too much about Charter's business to actually own this one, but I guess in the NASDAQ, I do own this one. If we look at the summary on this one, we can say it's a hold in the quant, B+, B, A+ profitability. They are super profitable. These guys just print money. But with everybody disconnecting cable TV, I don't know who the hell has cable TV anymore. My parents do. They have DirecTV. They pay a freaking fortune to DirecTV because they like the remote in the box. I can't stand the box. I use Apple TV. I use streaming services. So I don't pay DirecTV. I don't pay Charter. I have Charter opportunity at my house for their high-speed data. I choose AT&T. But it's a race to the bottom. If Charter comes out with a cheaper price for 1 gig service, I'm going to move to Charter. This is just losing money because all of their services are a race to the bottom with increased cost. Now, on the opposite side, we talked about Schwab having fantastic earnings. This is an opportunity. The Schwab, right now, they have a buy-in here at $73.50. $73.50. This is a fantastic play. Look at this in the short term. I think this one has opportunity to go higher. If we look at the long term, you've just crossed up on the MACD. You're not super high. Your RSI is a little bit overbought, but I do think you get to those all-time highs again, and I think that's 25%. So you have opportunity. Again, my point is take a look at this market because there's certain places where you can put money in, even though it's extended. I think we get into earnings next week with the big tech stuff. As long as that continues to show that AI is in this market, you will continue to you see that this is a buying opportunity. If we stumble, if for some reason something happens with Iran and Israel again, look at what happened on Friday, or Saturday. Thank God the market wasn't open because the market would have tanked. But it came right back. By Monday, we were up. You're just playing. Again, we go to the Qs and we look at the Qs. You're playing this game where you're up in the morning and down in the afternoon. But on the Qs, it's just we're in a downward trend. The buyers aren't showing up. But that means that you should show up as a buyer. That means that, hey, for the long term, I think you're okay. Short term, you still might have downside. We talked about this weekly on the Qs. If we're looking at a July to October kind of time frame, you're looking at this one down 11%. If we're going to go down 11%, you probably have go through the earnings and you have this cool off down there. Means that you buy on the way down. Doesn't mean you wait till the bottom because you will not time it. But it does mean that you buy at the bottom. Now, I waited till the end. I didn't do much promotion. But let's talk about Trendspider. Trendspider has a deal, and it's 63% off. Let's just make sure this is still going. I think it is. But, yeah. Oh, God. Oh, they just did it. $5.95. Tax refund pre-sale. This is going on for another 15 hours. $5.95 for Trendspider. You get my 4-hour algorithm. What you do is you go to Linktree, you sign up with Trendspider, and then you email me. And when you email me, just say, hey, I signed up for Trendspider. And you better have signed up for Trendspider using the email address that you used to sign up. Email me from that email address. I will send you a welcome letter that has everything that you can import to get you started with Trendspider. Everything. And they even took 25% off the monthly, $149. So if you don't want to, go for the year, if you can't make $50 using my algorithm, $50, and it doesn't mean, hey, I'm going to make $50 in a year. It means, hey, this got me out of Apple. It got me out of Google. It got me out of Microsoft. It got me out of Amazon, and I'm able to buy again, but when the algorithm tells me. I don't suggest you get out of those names, but if you wanted to because you're losing sleep at night because you're losing money, the algorithm protects you. And if the algorithm doesn't protect you to hold on to $50 a month, you're not trading with a large enough portfolio. And so Trendspider is not the deal. Go and find a free desktop software. One of the free ones is Webull, right down here. Webull, get free stocks when you sign up. Now, the second one is Seeking Alpha Premium. Seeking Alpha Premium, we went over the quant, we went over everything. How Seeking Alpha Premium helps drive your decisions. It's just a great, great tool. This coupon saves you $50 to $189 for a year. Again, if you have a large enough portfolio, I think you can find opportunities using Seeking Alpha. There's no ads. And finally, Alpha Picks. It's the third link on Linktree, right down here. Alpha Picks want to beat the S&P. The reason I say that is because look at the performance, 130% since July 1st, 2022. The S&P, fantastic return since July 1st, 2022. The S&P's up 37%. So you 3 times, almost 4 times your money, and it's $449 per year. If you're new to investing, or if you just want. We talked about how they released GCT as their most recent one, and I got into it. Giga Cloud Technology. Some of you folks knew about this one. Some folks asked me about this one. I said, I don't know. It's a strong buy in the quant. I don't know enough. Ironically, they went out and they did the research. They went to the warehouse in New Jersey. They talked to the CEO. Alpha Picks put all of this in their analysis, and I bought it 31 or 32. It's at $34.96. So I'm making money off of this one. The algorithm, if you want to use Seeking Alpha or Alpha Picks and Trendspider, my algorithm makes you 324% versus 79% holding for 20 months because it's only been available for 20 months. But 324%. That would have paid for your Trendspider subscription. That would have paid for your Alpha Pick subscription. Would have paid for your Seeking Alpha Premium subscription, all in one. 324%. And this one got you in here at 30. So you're still in the early stages. If we look at the weekly, this one has been on a run. It's still got some strength. But the Bollinger Bands have cinched up. Look at where the Bollinger Bands are way down here. The Bollinger Bands have cinched up. Is this one getting ready to move? I don't know. MACD is kind of high. RSI is kind of high. Again, they don't trade in and out of stocks. They buy and hold. It's 2 data-driven stocks every month. Designed for buy and hold investors looking for capital appreciation. Does not require frequent trading. In fact, I haven't gotten a sell rating from them. Alpha Picks portfolio is not designed to generate dividend income. They did just trim SMCI, but again, those are the 3 tools that I have. So if you've got any questions, hit me up. There are all the socials are on the link tree. My Instagram is on Facebook, everything. Daily Stock Pick newsletter. This is the best. I mean, God, it's such a good newsletter. It's free. So, in my mind, if I were out there just looking for something to find stocks and look for opportunities, this is the one I would do. This is a nice, quick, easy 3 to 5 minute read per day. It gives you all of the articles that I go over in the podcast. I don't know why more people aren't subscribed to it. Social requests, you can request to me on Spotify. You can send me Instagram messages. You can do it on Facebook, whatever you want. The most important part of the scans at the end. These are stocks that show bullish tendencies in my 4-hour algorithm. If you don't want to subscribe to Trendspider, then just subscribe to the newsletter and you'll get the charts. Again, if you don't have a big enough portfolio to justify $500 for the year, then go ahead and subscribe to the newsletter. So, okay. I will talk to you tomorrow. Let's hope that today winds up being positive. Let's hope we hold on to it. Take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.